Yo, it's Midas. Today's video is pretty important. I want to teach you guys how to survive this bull run. And I said this bull run because there is a bull run for 2025. Ignore all the FUD, the bull run's coming. But yeah, I'll teach you guys how to avoid FOMO, buying at all-time highs, and how to take profit. So disclaimer, this video is only for educational purposes. Make sure to do your own research. So principle one, no emotions is key to avoid the fear of missing out. And the fear of missing out is very common in most traders, most investors, where they see a stock or crypto run up and they think that because it's running up, I need to also buy in order to avoid missing that wave or missing that hype train. And that's just not true. You're going to lose a lot of money by chasing emotions. So just because a coin runs up 50% in a day, it doesn't mean that you should ride that wave. This is not the stock market. Crypto's super volatile. It's not like there's bullish momentum, bearish momentum. Like you might see that in some graphs and it might turn out to be true, but usually crypto is based off of hype and just a lot of emotional investors where people that chase this FOMO are usually used as exit liquidity by the people that bought in quite early. So yeah, a coin can run up 50% in a day, but can also dip 100% in a day. So don't be that exit liquidity. And don't buy because of hype. Hype pumps the coin, but fundamentals allow you to find those coins before they get hyped. So see my video on the real way to invest in crypto where I found Sui and Solana for very cheap prices. This is what I mean. Like the people that are making money in crypto are finding these coins very early, but they're not investing in meme coins. They're investing in altcoins that have potential. That's what I want you guys to do when you guys are watching this channel, to be the ones that are finding these coins early before they explode. If they're ranked in the top 100s of top cryptos, you're too late. You can get a safe return, but if you want those exponential 5x's, you got to buy the coin a lot earlier. My second principle is market dips are buying opportunities. So never think to sell for a loss. Unless you're investing in a meme coin, you should always expect your coin to rebound. And I'm thinking that you've done the research, you built a thesis, you understand the narrative of why the coin will pump. If you have all the research, then that coin should theoretically pump. Remember that. Always consider averaging down your buy-in price because selling for a loss, that crypto's so volatile, that crypto that's down maybe 30% could just rebound up in less than a few hours if just bullish news comes out. Research past cycles. So which months did crypto pump the most? Cycle tops in 2021 were early March, early April, and late October / early November. Also think about which months did crypto dip the most. Huge dips in 2021 were in the summer because there's less liquidity into the markets, less traders, people are on vacation, so that means there's not much volume, and volume drives the momentum of prices. Cycle also ends in December when it pumps in November, so keep that in mind. And determining price targets. So I want you guys to be realistic. So set price targets and stick to them. Don't get greedy. It's better to have profits or not fully time the top than be left with a dead bag, waiting for next cycle to recover, which is in 4 years. Don't be like those bag holders holding ICP or XRP. Despite it recovering now, they had to wait a long time for them to make the money back. Don't be like those guys. And exit out in phases, not all at once. So set a price target for 50% increase, 20% increase, sell a bit so you can capture all tops. And you can do this by creating a profit-taking plan. And this is in the next principle, principle 5, which is the profit-taking plan. So you shouldn't be selling all at once. It's very hard to time the markets. You should be capturing every peak on the way up. And if it's not on the way up, then selling it on the way down so you minimize your losses. And this can be done through basic technical analysis. You should be able to determine if the graph is in a bullish or bearish trend, flags, reversals, wedges, double bottoms, head and shoulders, etc. Bullish, ride the way and sell on the way up. Bearish, ride the way down, sell on the way down. So here's an example with SUI. Like let's say you bought SUI over here when it's like $1 and then it kept pumping up. You would sell it every single increment, every single arrow on the way up. And then let's say you bought at the very top here, so at the highest peak, and now you want to sell on the way down. You could sell, you would be selling every single time it rebounds up. Because the stock isn't going to drop to zero. It's not. It's going to drop a bit, then go up and keep rebounding, slowly go down and down. That's when you want to sell in order to minimize your losses. Because it could go down and then rebound even higher. Like when Sui was running up, you could you could see that, right? It went down and then it shot all the way back up again, even to a higher all-time high. This is what I mean by basic technical analysis. By understanding this, you would understand if we're in a bullish trend or a bearish trend and base how you want to take profit off of that. So principle 6 is dead bag. Don't be left holding a dead bag. Everyone saying hold your Bitcoin forever does not understand market cycles. There's going to be a bear market and there's always going to be a bear market. So despite having Bitcoin ETFs, BlackRock buying in, and the US Strategic Reserve buying Bitcoin, keep in mind that there will always be market manipulation. Crypto prices are now becoming a lot more centralized, where it's based off of complete news. If Trump says that he's not buying Bitcoin anymore, the price would drop down by 50%. It's all based off of just news. It's not retail can have a say anymore. It's all about the big players and their influence. But with market manipulation, the rich always have plans to buy retail coins for cheap. They obviously won't sell because Bitcoin is always increasing in value. But my thesis is this: why not try to buy at the bottom and re-enter, always aiming to take profit? Like if Bitcoin goes up to 250K USD, why not sell at 250K? Maybe it drops in the bear market to 100K and just re-enter if it goes even lower because Bitcoin is so volatile. People didn't think that we would hit 80K, but here we are again. So yeah, nothing goes up forever. Keep in mind there's a euphoria phase in the bull run. You will feel like a god at one point when everything just keeps going up, but remember to keep your emotions in check. Principle 7, increased awareness could signal a cycle top. So when everyone's talking about crypto, your friends, your mom, it could signal the top is close. Mass FOMO can push prices higher, but it also indicates that retail investors are flooding in, often happening just before a correction. So it signals that the market is in the euphoria phase, and most of the early adopters and institutional investors have already positioned themselves, whether it means to sell or to do shorts, etc. Keep in mind that. Principle 8 is finally now is the perfect time to load your bags. So if you want a way to understand how to invest in crypto regardless of, outside of, Ethereum, Bitcoin, and meme coins, then watch my video on the real way to invest in crypto. I'll teach you guys how to find those altcoins early. There's always been a debate about new versus old technology. Personally, I think that new technology has been known to always take over old technology. So just because your coin or old technology, like let's say like Algorand or ICP, it's down around like 400% from its all-time high from the last bull run and still hasn't recovered, that does not mean it will pump back to the previous all-time high. The ICP that was heavily manipulated. You can read the stories where it was at like 400 USD and just dropped straight down to like 20. That was quite insane. So don't be left buying right when a coin just drops, especially that high. Stick to new tech when in doubt. Stick to SUI, Solana, Aptos, just any of the new technology. It's a bigger bet and better bet than any old technology you could find. And find chains such altcoins with the most adoption. Remember, winner takes all, and users are less likely to swap when a norm has been set. You should also have a winner in every category. Remember diversification. What is the best AI? What is the best reward asset? And don't hold more than 6 tokens. 100 tokens, putting in $50 each will not get you rich, but putting 5K in one token, it does have the potential to make you rich. You should be doing a lot of research and building a thesis when you're buying tokens, not just buying random tokens that people say on the internet. Like I mentioned, now is the best time to load your bags. Too much FUD and bullish news that investors are missing. Remember, the crypto event is happening tomorrow with Trump. So remember, watch the market rebound very quickly. So yeah, this is how to survive the bull run. This is mainly for crypto advice. I think I'll make a video for stock advice. So yeah, stay tuned for that. I'll catch you guys in the next video. Peace.